Welcome out to the halftime report presented by Tackle Trading. It's a pleasure to be with everybody here today to break down the market activity. And we got market activity to talk about. We're going to take a journey through the market skyline as we discuss the indexes. We're going to get into a little bit of stocks in the news. Got some earnings to report on today with those Snowflake reporting earnings, Dollar General, CrowdStrike also reporting earnings, and Kroger. We discussed Kroger in Queens Court this week. We did discuss waiting on earnings. Well, let's check out that breakout Kroger's having here today. So we got some good, got some bad in earnings. We also got Apple in the news. We got Boeing in the news. But before we get into all of that good stuff here at Tackle Trading's YouTube program called the Halftime Report, I got two coaches I'm going to bring in to say hello to. Pleasantries, Coach Mark, Coach Greg. Coach Mark, we'll start with you. How are you today?
I am having mild or asymptomatic symptoms to the market right now.
To the market. Okay, I just wanted to be clear on what those symptoms were. So does that mean you're good?
Yes, that means I'm good.
Awesome. And Coach Greg, how are you today?
I'm doing all right. I have no symptoms whatsoever of anything.
Are you asymptomatic towards the market right now?
I'm asymptomatic to pretty much everything. So
I like it. All right, let's go ahead and we're going to start with Coach Mark here. Coach Mark's going to stick with us for a few minutes as we're breaking down a couple news items here today. First and foremost, Mark, a little bit of a daily update that you've been providing us on Omicron. Give us that update, my friend.
Well, Algo's tried to sell off on a second confirmed case in the United States.
Minnesota,
that was
correct?
very short-lived. Very, very, very short-lived for just a few minutes, and then quickly reversed up. Omicron news out there. World Health Organization has came out and said that it expects existing vaccines to be effective against severe cases.
Positive news.
In all of the cases in Europe right now, about 50% of the Omicron cases are asymptomatic, and the other 50% are very mild symptoms. Both of the cases here in the United States, very mild symptoms as well. This is following a pattern that we've started to see develop in the last few days, where mild cases. And so the anecdotal evidence that we started seeing out of South Africa is climbing in different parts. We're not seeing severe cases with Omicron. Starting to see Israel has came out, and their scientists say they think existing vaccines are going to prove to be highly effective. World Health Organization has followed up with that. So lots and lots of positive news on the Omicron front. And then you have more and more. JP Morgan's head quant guy came out and basically reiterated what we've been saying for the last few days, that listen, if it's transmittable, but if the cases are mild, and the cases are mild, this is theoretically a really good thing long-term on the virus. It's what we know about viruses. They mutate, which is a scary word, I know, right? But mutations in viruses are oftentimes positive. So the more and more we're learning, and once again, we're not out of the woods with headlines, right? A headline could come out at any time saying blah, blah, blah. But, you got to base decisions on mounting evidence. And right now on Omicron, health organizations, cases on the ground, a lot of good news on it. A lot of good news, both from a societal standpoint and from, the worst market fears of vaccines not being effective and lockdowns and this and that. We've gotten a string of good news as the week's gone on.
And to the marketplace, that is the concern, right? It's okay. Is hospitalizations gonna go up? Yeah, are we going to see more lockdowns, government shutdowns? Are we going to see decreased economic activity because of this? And over the last 3 days, obviously the volatility is still here in the market, but obviously over the last 3 days, we're also seeing a little bit of positive news in that direction. The two biggest concerns were, does the vaccine offer immunity and protection to this new variant? The news so far, and it's still early, but the news so far is positive in that. And it's after, and a lot of that negativity towards the vaccine was due to what Moderna's CEO said on Monday, kind of creating a little bit of spark. Haven't really seen any follow-up to that. And then the second one was, is it going to be is it more severe? So far, Mark, I haven't heard of any case out there of a severe nature.
And that's the thing, and science and statistical probability is based on large data sets, right?
Yeah.
We're getting lots and lots of data coming in, and it's all on the mild, and sometimes the words are being used extremely mild and or asymptomatic. So, I mean, you're getting lots of cases, and you're not seeing those. Oh my God! I mean, it's overwhelmingly positive right now.
Well, and
Overwhelmingly
again,
positive.
still early, right?
Still early.
Let the scientific community kind of go through that journey, but so far positive news development. And again, it's just, you remember a few months ago where we had that wall of worry and there was like 5, 6 major items, right? Well, you keep knocking a couple of those pegs down, you remove a little bit of that wall of worry. What starts to happen? More consistency. Remember the wall of worry all through September and October? The wall of worry, inflation, Delta, the wall of worry, government shutdown, debt ceiling, wall of worry. You knock one down, things slow down. You knock another down, things pick up. You knock another down, consistency starts to build. Appreciate the update on that front, Coach Chucky. The second thing I wanted to bring you on very quickly was regarding crude oil and OPEC. OPEC met here today. Chucky, give us an update.
They determined to continue with plans to add 400,000 barrels a day of supply to the market in January. So they basically said what our plan was. We're sticking with it. Matt, that was your call. I thought they might cut. You were right. You win.
Hold on.
Whatever.
Hold on.
Let's
stay on that for a second. That doesn't happen a lot in my life.
You were right.
Okay, hold on. I'm counting the times this has happened in my life. 1, yep, 2, 3
I know
times.
because I'm usually right.
3 times.
Yeah, I get it. It doesn't happen very
That has
often.
nothing to do with pride.
But no, they stuck, and they did throw out the caveat that, hey, if oil prices slide anymore, we reserve the right to change our mind. But for now, they're sticking with it. And once again, if Omicron, because that big, huge red candle wasn't on anticipation of OPEC cutting, that big, huge red candle was on the Omicron variant popping up. And so lots of room to potentially climb here. If Omicron is, Omicron is a big, huge story right here for crude oil.
Do you maintain your stance you had earlier this week that this is most likely an overreaction to the news, and this could be a buying opportunity once the volatility subsides? Has there been anything changed in that analysis?
Not at all. I think crude oil eventually, and this is the problem with all Omicron related things, whether it's Delta Airlines or Carnival Cruise Lines or oil or whatever it may be. It is, do I wait for technical patterns to emerge to give me nice quality signals?
The answer is yes. You wait for quality technical patterns. Yes.
All you have to do is give up V-shaped recovery. Which, if you make that philosophical decision in your life that, hey, if things just V-shaped, I miss out.
Psychologically accepted, I'm already there. Boom, done.
Then great, you do. Like, even if, and if you wait for technical signals.
Can I put it a different way?
Yeah, sure.
How about we just give up, get rich quick here?
Yeah, and that's what it comes down to.
How about we just give that up and we nail some base hits over and over and over again with quality technical setups? That's all I'm saying.
And that's really what it comes down to, is that just that little bit of patience. Hey, listen, my account is down. I had crude oil cyclical, some reopening plays. It got hit ever since last Friday. But if you go chasing, you risk compounding problems. Wait till the algos get on your side, wait till the traders get on your side, wait till the technicals get on your side. And if you're just willing to be patient, yes, you miss out on V-shaped recoveries and I get to make all this. Yeah, that is not the secret to success in the long term.
Well, and honestly, Chucky, I don't think the media does this conversation any good or any service either, because over the last 3 days, every single day, you know what I've heard from Bloomberg, Reuters, Seeking Alpha, all over financial news media. Buy the dip alive and well. Buy the dip has got absolutely slaughtered this week. And yet today's headline was market ripping on buy the dip mentality. No, it's not. This is an overextended bounce. That's all it is.
I mean,
wait for the quality technical setup. But when you see a headline and you're not that trained market assassin, right? You haven't been here, done that type mentality. You see that headline, what do you want to do? Oh, market's ripping on buy the dip. Let's go. No. Wait for a quality technical setup. I said it on Monday. I'll say it today. Oil's going to be a wonderful buy. And I think it's going to be a pretty good buy sooner than later, Chucky. Would you agree with that, by the way?
Yes.
But it's only going to...
Oil develops a pattern before a lot of the...
I do too. But it's still going to develop a pattern. And I still think it's extremely important to give up the V-shaped recovery mentality and wait for a double bottom here. I think that's perfectly okay because, Chucky, I haven't seen a lot of V-shaped recoveries in oil literally since the pandemic started. This dip, that's not V. It comes back in, consolidates, and then gives you a clear breakout channel against a head and shoulders pattern. Gives you that clear pattern. Right there, gives you a clear pattern on a breakout. Gives you a clear pattern. That's not V here. Look at that consolidation. Gives you a clear breakout. Also gave you the retracement. There's going to be quality patterns develop here. There is. And I just simply believe that it's always better to wait for slowing momentum, double bottom, double top, wait for the breakout, then let's rock and roll, than it is, I like support, let's go. Yeah, let's give it a little bit of time here is all I'm saying.
Yeah, last comment on buying the dip, and then I'll let you and Greg do all of your wonderful things. We go to SoFi. I love SoFi. I think SoFi is an amazing company, and all of that. Buying dips though, in this area of the market, like over the last 3 weeks, especially in the underbelly, like if you buy the dip and you're premature, I mean, you risk, burning through your capital, where all of a sudden, I mean, I see it on message boards all the time. I wish I had more money to buy the dip. And the reason that they don't have any more money is because they didn't wait. I
would tell them to come to Tackle Train's Discord channel, and they might not ever have that problem because we'd all tell them that is ridiculous mentality.
I mean, on Friday and Tuesday, and I shared this stat with you, retail came in and set records for the amount of stock purchased on Friday and Tuesday buying the dip. Hope they're right? Hope they're right.
Of course, yes. Of course, 100% hope they're right. But they weren't right on Monday, and they weren't right on Tuesday, and they weren't right on Wednesday, and so far they're right on Thursday. But this market is a very specific up and down nature of the marketplace. Today should not be one of those days. In my opinion, today's not one of those days where it's like, oh, wow, okay, well, we're through the volatility yet. You're in the exact same volatility cycle. It's just up today versus down. There's no change. And I'll say it again. I'll say it till the cows come home. You wait till the volatility subsides, sir. You wait for the volatility subsides.
You two gentlemen, that's all I had. But great news out of World Health Organization on the potential of vaccines. I'll be up every day to update on the headlines. You guys have a great show.
Really appreciate that, Coach Mark. And again, as the certain things that the market is worried about, as they go into the rear view mirror a little bit, the market typically does slow down. And so hopefully we do see a little bit of slowing momentum as we knock down some of those walls of worry. Because Coach Greg, December, we're in the second trading day of December. December is historically the best trading month of the year. It comes in at a clip. Let me give you a couple stats here, Coach Greg. Comes in at a clip of a 79% win rate, 79% of the time. December goes up in price. It also comes in with a clip of an average price performance of about 2.3%. Obviously, starting off December, not on a positive note, but again, every cycle is going to be a little bit different where traders focus on different things. Obviously, we got Omicron, we got debt ceiling this week. There's things that are impacting the market right now, but we are starting a season that typically does have some positive market responses. We're going to break those things down technically with Coach Greg, and we're going to start right here with a simple update from a technical perspective in the S&P 500. Yesterday, we did clip that 50-day moving average. We talked about updating those support zones. Let's take a look at it from a 30-minute chart here. You see the 4560 get destroyed here yesterday. Found support not to the penny, but close around that 4,500 level. That is one of those significant whole numbers. Starts to find a little bit of recovery here on the overnight action. Early morning hours before the cash opens starts to fade through the European hours, through the Asian hours. The international markets are coming down, but the cash open came out and saved the day here, Greg. Pounding the table off that support bounce here, Coach Greg, on a slight increase in volume. As you can see, the market has been building a little bit over the course of the last few hours in the marketplace. Coach Greg, with that backdrop kind of established here, we've been navigating this market technically all week long here in the halftime report. Every time I bring on a coach, basically, because we got Coach Mark on Mondays, we got the Queen on Tuesdays, we got Tyler on Wednesdays, you on Thursdays, and Coach Frank on Fridays. I'd like to get your guys' updated thoughts from a technical perspective. What is your read as we're navigating this 50-day moving average bounce in the S&P 500?
Yeah, I think Mark made a good point. You're starting to get some more positive news. For me, the things that were affecting the volatility of the market, and obviously it exploded 5 sessions ago, right?
Yeah.
So we had the Fed, we had Jerome Powell speaking. That was one thing. We had the debt ceiling concerns that you talked about. We had the Omicron news that was first and foremost as well. Understandably, the way it came out in the media, at least from my view, was there was a fear there. There was we just been dealing with this for a long time, so there was a bunch of fear that came out, even though we didn't really have a clear picture of what's going on. That picture's starting to become more clear as we get some data. So all of this positive stuff is helping out. We're starting to see just a very small shrink in the volatility today. But I think the technical read here, 2 things that I think are super important. Right where this shelf is, where it dropped yesterday, right? There's kind of like a little shelf right there, up a little bit more there, just above those 2 candles yesterday and today. There's a little shelf there before it fell down, right about there. Yeah, right about there. There's a little shelf there. As far as I'm concerned, today's movement is still inside of yesterday's body of a candle there. Right, so it is working its way higher, but it does have some technical factors that it has to get by. If it can get by those, if we continue to get the good news, right? I believe the debt ceiling, I think the thing is Friday at midnight or something that has to be taken care of. I don't really know that much about it, but once you said it best, the wall of worry, right? Once these things are eliminated and we get the more positive news, I think you're going to get a little boost there, but it still has to break those short steps there.
Yeah, and I certainly agree with you technically, and you are seeing a little bit of positive technical analysis as you are breaking out of those levels of now resistance. They were acting as support. I would ultimately put that around that 4,600 level. If you achieve that, you're going to see a little bit more price appreciation. But you have also seen this number, and that's why I say the volatility is still here. You've seen this song and dance throughout the last 4 or 5 trading days. Look at the initial surge down last Friday. That's a confirmation candle against a reversal intraday. You see it just reemerge. News comes back out to the market, drives it back down. Market starts recovering. Look again, that's a breakout from an intraday perspective. It gets snuffed out. News comes back out, right back down. And so you've had a little bit of intraday fake out scenarios over the last couple trading days, because once again, as you're in that news driven cycle, when news comes out, all of a sudden, and again, what's the kryptonite to technical analysis? Volatility. Volatility it happens because of news. And so once the news comes out, it destroys all things technically in a moment's notice. That's why I say you got to kind of wait for a little bit of an additional confirmation and see something follow through, not just from an intraday perspective, but most likely from a daily price action perspective. I'm not there until I see at least 2 days of price appreciation here. We've only seen the scenarios where one day up then just gets absolutely butchered through the news cycle. But let's take a look at the wall of worry here, Greg, because I think it's important to identify those things that are concerning to market participants right now. Number one was Omicron, right? That's kind of the news that really started sparking this volatility. And the uncertainty surrounding that on the holidays, where you typically have very few market participants and algorithms can really control the price action. And a lot of times on random Fridays following Thanksgiving, I'll actually see markets perform more volatile than normally because there's just not a lot of typical participation. Obviously, this year we had to go through the news cycle with Omicron, and it sparked a lot of volatility in the market. Market starts going down, 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 down. Well, like we said on Monday, why don't we give this one a little bit of time, guys? Why don't we see how big the damage is on this one? Because we've went through this before. This isn't like it was 18 months ago, where we don't have any information, where we don't know how the virus behaves around vaccines, and we don't know, there's so much fear driving. That's not the case here. And so over the course of the last 3-4 trading days, what have we seen out of the Omicron situation? Positive developments to the point where today I don't think market participants are looking at this variant situation and being that concerned about it. The second thing, and we're still in the middle of that, right? I did say earlier today, let's give it more time, but you're starting to see that news story dissipate a little bit, and I think that's a positive development. The second thing that the market is worried about coming into this week, which is adding a little bit to the increased volatility, is the conversation happening from a political perspective in Washington, and that is the debt ceiling. And we went through this just 2 months ago, and so far there was a lot of people who are like, "Oh man, this is not going to get done, not going to get done." Well, here today, the House literally just about an hour and a half ago passes a bill to fund the government through February 18th. That now is going to go to the Senate. And we know some fireworks can happen in the Senate. We know some fireworks can happen in the House. But we can also rely on this. Chuck Schumer, the majority leader, the Democratic majority leader, and Mitch McConnell, the Republican minority leader, they have both stated that they want to fund the government, including the minority leader today, Mitch McConnell, who literally said today, we're not going to shut down the government. Almost, keyword almost, but almost no one on either side thinks that's a good idea, because it's not a good idea, not right now. And so that's starting, and it hasn't been the negativity this time as it was last time in October, because once again, just think about what Mitch McConnell said today. Almost no one thinks it's a good idea to shut the government down right now. And so that looks like that's not going to work into the conversation as market participants in that wall of worry. And then the third thing, which I feel is probably the most important of the three, and that's the so-called hypothetical pivot that the central bank is doing from a dovish monetary surplus, monetary supply, monetary stimulus coming into the market, and they are removing that stimulus. And Jay Powell, even myself, who I listen, I'll pat Jay Powell on the back when he does something worthy of patting him on the back. I'm not going to give him an attaboy on this one, but many in the market are suggesting that this is a major pivot from a monetary policy perspective, going from historically dovish to whatever removing quantitative easing is to the market. I don't believe that's hawkish, but you got to at least, even a naysayer like myself when it comes to the central bank, even I have to admit that that's a pivot from Jay Powell. On Tuesday, he made that statement that we're looking to speed up the tapering process of quantitative easing. And I was in the halftime report, Greg, and I said he might want to take a moment to think about that one, and he may come back tomorrow and revise the statement. Greg, he didn't. He didn't. He didn't revise anything. He is fully on board with speeding up, at least him. Again, the central bank is a committee, but at least the head of the central bank is on board with speeding up the tapering process. And that is something I fundamentally agree with. I don't think the market needs quantitative easing. I don't think the market has needed quantitative easing for a very, very long time. And I'm talking even before the pandemic. And so you got that pivot from the central bank. Greg, in that hypothetical wall of worry, you have Omicron, you have debt ceiling, and you have, and obviously the backdrop of heightened valuation in an inflationary scenario, but that's just things we accept for as normal course of activity right now in the marketplace. The third one you obviously have with the pivot. Greg, specifically on J. Powell, what is your read on the J. Powell pivot from dovish supporting the market with monetary stimulus to now looking at speeding up the removal of stimulus from the marketplace?
Yeah, I think if you look at the way he's been acting the whole time, right? He's been steadfast kind of in the way that he's been talking about tapering, doing all these things. He's been kind of very similar, right?
Yeah.
Well, earlier this week, he kind of, I don't want to say he flip-flopped because that's not the right word, but he took a different stance. And I don't think it's a necessarily bad stance, much like you. Like I said, I don't believe that we need tapering for the markets either.
Yeah.
But it's change, right?
It is change.
So the traders, they don't like change, right? They like, as much as we get volatility, they like certainty, especially from something like the Fed or the monetary policy. So I think that change, I think people just need to digest it. And I think that's why we had that big influx of volatility, like going, hey, wait a second, this guy doesn't seem like he did 2 weeks ago. And I think once they digest that, I think it will kind of smooth itself out. But I do think it was a bit of just a shock, not a surprise, but a shock to some of the participants.
Okay, let me ask you a question, Greg. If somebody's on life support and you remove the life support because they're doing better, is that a positive or a negative development?
That's 100% positive.
Okay,
100%.
so why is it therefore then in the marketplace when the Fed decides to remove stimulus because the economy's cooking at over 5% GDP, why is it that the market sees the removal of stimulus as ultimately a negative when in my perspective, when you're rocking GDP above 5% and unemployment's underneath 5% and inflation's above 5%, there's not even a debate. There's not even a debate regarding what you should do with monetary stimulus. It's very simple. You shouldn't be feeding the market $120 billion per month with inflation above 5%, unemployment underneath 5%, and GDP cooking above 5%. That should not even be in the discussion. It's laughable to even consider stimulus with those types of raw numbers.
And you're right. But that's looking at it from a logical perspective, right? We've been getting used to this free money for a while, right? So I think it's just more of the change. I agree with you that, especially the life support analogy that you use. Absolutely, that's a good thing, right? Like we need to get that away because you may need that at another point in time, right? Like if you taper down and then something happens and our GDP numbers do fall, well then you've at least got something you could redo, right? Something you could another bullet in the chamber, if you will.
Yeah.
So it makes logical sense, but I think it's just the feelings of, hey, this is a change. We're not used to this. That's kind of how it feels to me. Like that's how the reaction seems to me. I still think it's a good thing. I agree with you 100% from a logical standpoint. But like I said, I think it's just the change of it. And I think, as we go along here, people kind of come to that mindset of, hey, you know what? tapering, getting, pulling some of that back is probably a good thing. But I think the initial shock was just what we saw. And I think that had something to do with the bump in volatility. Obviously, all the other things we talked about as well.
Could you imagine a market where we don't have to actually think about the central bank and J-Powell every day? I think that's I think that's a positive thing. That's all I'm saying.
Are we going back to 1952?
Yes, we are. Yes, we are. I want Eisenhower back. Let's go back to good old times there, Coach Greg. All right, Greg. Thank you so much for your thoughts on kind of the current wall of worry in the marketplace. And again, I do believe that as some of these pegs get knocked down, the market starts to slow down a little bit. The market starts to behave a little bit differently from a news cycle perspective. You see some slowing momentum. I am in the camp that this volatility represents an opportunity on the buy side. I'm in that camp, Greg. Okay. Yeah. I'm also in the camp though that it needs to be treated with hot stove. Stay away a little bit, right? Yeah. Let the volatility subside. Cut position size down. You see a trade, you take a trade. But again, it's about limiting that position size, making sure you're structured on your entries versus your stop losses, and understanding and accepting one thing. You have to accept one thing in this market environment. On any one day, this market could blow up any stop loss. Yeah. Any stop loss.
The reality is that. The reality is, as I see it as well, is volatility definitely favors the bears, right? Like it typically does.
100% does.
Typical bullish action. You can see it kind of there from the October there, basically, I would say like October 12th on up until November 8th or so. Just a slow, methodical run up there for the bulls. Well, the bears, they like the volatility. So if you're looking, and I still don't think you can say that this is bearish territory. This is just a pullback so far.
That's how I see it.
So I think you got to sit there and go, okay, let the volatility subside as you made the point, and let's get back to that nice slow drift up for our bullish. And you've got to wait for that to set up. If you don't,
can I take a second on that one though? Can I take a second on that one, because you're looking at a couple different environments here, and let me take out a little bit. I just want to kind of highlight it. Let me get my Epic pen. Give me a second, Greg. Let me pull up the Epic pen.
I'm gonna pull you right into a whiteboard session.
Let me give the people what they are clamoring for, and that is the Epic pen. Number one, this one right here, and then this one right here. Those are the two little tiny cycles I want to talk about. Okay. When you're initially seeing that pullback in the marketplace and the volatility gets the volatility picks up. Obviously, the volatility today is higher than what it was during this short-term cycle we're talking about in the marketplace. But you see, I said a statement earlier today. I said, guys, I don't care about intraday here, not for a market bottom. I'm looking at give me a second day of follow through. Give me one more day of follow through before you can start projecting a little bit more than one day here, because we've had 1 day rallies in the market, right? We've had these 1 day rallies in the market. Well, you see when the market starts to pick up to the downside, you see the consolidation here. Look at the up and down nature of the market. At no point did you have any follow through here. At no point did you have any follow through here until that second day. Look at the second day price projection to the downside. Well, same type of conversation here. The up and down nature of the market. Up, down, up, down, up, down. What happens? You see that hammer candle here? Well, it broke that pattern there, and all of a sudden, breakout against confirmation. And guys, I know there's a lot of you watching the halftime report that was here literally on October 13th when I said this could be the bottom here, guys. Well, a lot of that analysis was due to the changing dynamic of volatility. A lot of that analysis was on the backs of analyzing a typical prototypical reversal pattern. And then right here, that's that October 13th double bottom there. That was the first increase in support that we had seen in quite some time. And then you see the confirmation breakout. And then look at that marketplace. That is a very, very easy market to trade in. A lot of traders were extremely happy in that environment. Well, that took us a good month in navigating that bearish cycle, and we dealt with multiple patterns, one against the 50 that ultimately got broken down, the other one a slowing momentum head and shoulders pattern that ultimately confirmed. That's all I'm saying here is let the market go through its normal typical reversal cycle. And if it does, we're going to have a great, easy environment to trade in. Whereas right now, the only thing that's happening is anybody fighting in the market today is just fighting the volatility. They're not actually projecting higher prices. They're just fighting the war of volatility between bulls and bears. And I've always just felt this as traders, we don't have to fight those battles. We do not have to fight those battles. As traders, we can go take a nap on the hill, watch the battle play out, and then just come and join the victors and just celebrate with the victors and ride in the parade. Let's just ride in the parade is what I'm suggesting. And that's after the volatility subsides, we start seeing a clearer technical picture, and then the consistency starts building. We're going to see that again. It happens over and over and over again. But right now, we are still early, and I'm talking specifically from a news cycle perspective, a volatility perspective, but also a perspective of traditional reversal analysis within the market. Coach Greg, thank you so much for your thoughts on the major market indexes as we navigate a very choppy market as in the tackle trading community this week. Let's get a couple of your thoughts here in the commodity market here, Coach Greg. Let me go into crude oil. I was talking to Coach Mark earlier today about crude oil, talking about what OPEC did. They did stay pat with their 400,000 increased barrel production through January. For me, it was simple. They weren't even meeting the 400,000. Why change it? That's kind of where we're kind of in line with. So we don't really have a fundamental change from OPEC this month. Technically here, Greg, what's your read?
Yeah, this is tough right now. Maybe a little bit of slowing momentum here, but because we're under that 200 there, I think we've got to see some confirmation of the upside before I'm getting involved. You know, when Mark was on here, you guys talked about, you know, I think there's going to be an opportunity in crude oil at some point. It's just not ready for prime time right now, as far as I'm concerned. I do like the fire off of today's candle off of that level.
I like that support level too.
But I still, again, for me, I'm a bit more conservative typically when I'm trading. I've got to see some fire off, you know, some follow through, just like we talked about in the S&P 500. I've got to see some follow through, and I like to be on the other side of that 200 before I get involved with the crude oil here.
I think there's one key metric I'm looking at, and it's the combination of that $70 handle right where that 200-day moving average is as well, Greg. I think that's a kind of a line in the sand from a resistance perspective that you absolutely have to reclaim, in my opinion, before you see any type of momentum to the bull side, right? Yep. But I also think, and again, we're still stuck in this increasing volatility cycle within crude oil as well as within the marketplace as well. But I think you're also looking at that 9 EMA here. That 9 EMA is going to be very telling, in my opinion, towards any reversal analysis. And whereas in the S&P 500, when you're looking at the S&P 500, that 9 EMA is kind of hovering the price action right underneath that. And that's why I say that 4,600 level right there, that could be very interesting as you start to navigate the old shelf that you were talking about. But that 9 EMA is going to catch up to that price right in that 4,600 level as well. When you look at crude oil here, Greg, I mean, the momentum, and again, Friday's candle was really, really nasty for crude, and it was more nasty than, say, the S&P or other areas of the financial world. That momentum just got it so low so fast that you just built so much momentum against that 9 EMA. You could see some weird price action down at the low prices until that 9 EMA starts to catch up to it, and then I think we can start looking at a little bit more. Where is that level that we're really comfortable with here? We haven't tested, and that's the thing, guys. The 9 EMA is very important to technicians, and it's very important to short-term traders because it's that momentum moving average, right? It's the one that we're all looking at from a momentum perspective. When the 90 MA is separating itself from the 20 SMA, you're seeing an increasing momentum condition. Well, when you're seeing the 90 MA right now on crude oil, it's increasing the distance between the 90 MA and the 20 SMA. That's increasing volatility. That's increasing momentum. And right now, that momentum is still to the downside. I wouldn't be fighting that battle. Once again, knife's falling, let it hit the ground. We got to let crude oil hit the ground here. That 90 MA and watching that 90 MA catch up, that is just a data point that I would be tracking if you're looking at crude oil. Let's take a quick peek at gold here. Greg, gold getting just absolutely, I don't want to say obliterated, but that is the word that came to my mind here. But it's more about the violation of the short-term support here, Greg. Obviously, volatility is that the word of the day or the word of the week, or are we going to put it the word of the month? I hope it's not the word of the month, but it is certainly the word of the week. Here, increasing volatility yet again in the gold market, navigating a choppy bearish downtrend at this point. Even the biggest holdout has to accept defeat on this one. This is now a bearish downtrend in the short term. Where is that support level that you would be looking at here to stop the bleeding? Is it 1760 old pivot points, or are you looking a little bit lower here around 1720 or even lower?
Yeah, I think, well, I think you've got multiples here, 1750, 1760 area, if it could hold here, but you've got that 90 MA coming down. It's actually increasing momentum to the downside.
Same conversation.
Yep. So I think you could come down and see that 1720, 1725, that old double bottom down there, right about there.
Right in there, 1700 by like that 1730-ish.
Yeah, 1725-ish. Yeah, I think looking at that, you could see that get down to there pretty easily before we get some real support. It's a real choppy mess, and I don't think there's really much to say about it at this point. Wait till it finds some strength.
I'm kind of with you on that as well. You're obviously seeing a shift in how the market is seeing the central bank and how they are pivoting. And again, I do disagree with that. I do not believe Jay Powell is pivoting, because I don't believe removing stimulus is a hawkish act. I believe it's a neutral act, right? But I understand why others would disagree with that, and I understand why the market is accepting a pivot from Jay Powell here, because he is pivoting on the tapering to a certain extent. Totally understand that. But if the market is fully going to embrace Jay Powell as a hawk, gold is going to struggle in that environment. And it's going to struggle because the dollar is going to appreciate in that environment. The dollar has been performing fairly decently against other major currencies for quite some time. Momentum is currently on the dollar side. A little bit of increasing volatility this week, but it's still trying to hold its pivot. That's going to be a negative, in my opinion, to the gold market. And thus, I certainly do agree that 1750 to 1760 could hold, but I don't think traders are looking at those levels as buying points, quite frankly. I think you're waiting for, honestly, Greg, if you're looking at gold, I think you're waiting for something more traditional, such as that traditional reversal that tackle trader will remember, that navigation of that reversal in the gold market. But I think that's what we're waiting on at this point. There's just too much up and down nature and too much hot take Monday, Tuesday, Wednesday, Thursday, Friday, and any other day that ends in a Y when it comes to the dollar, the Fed, gold, and truly understanding the future of the interest rate cycle, because that is the analysis that is really impacting the dollar and gold. I wanted to get your thoughts on Bitcoin here, Greg. I've had almost every coach this week at Tackle Trading has been impressed that Bitcoin has held the line, of support, whereas many financial instruments have not. What is your thoughts on Bitcoin from a technical perspective, Greg?
I was a little more excited about Bitcoin until yesterday than today. You can see that it was kind of, with the exception of that one big down day about 5 sessions ago, you could see that it was riding the upward trending 50 moving average there. I was thinking if it could hold that, we got kind of a ascending triangle pattern there with the 20 MA right there, that red one. That ascending triangle pattern was looking real nice. I was looking for that breakout above that line that you've got in there. Falling below there today, it's not a deal breaker by any stretch of the imagination because you have support at 55,000. But I would have liked to have seen it kind of slide up there. That would have been basically in the next 2 to 3 sessions. We would have had to either break out above or fall below. And it looks like we're just falling below that 50 today. Again, not really a huge deal because we do have that support at 55,000.
Yeah, and you also got a lot of wickety-wick nonsense underneath that 50K as well. By the end of the day, we could see something very similar here. I'm with you on that, but I kind of like where the market is telling us they're selling here. And what I mean by that is when you look at this from an intraday perspective, let me get off my Epic pen there. When you look at this from an intraday perspective, the market's telling you where they're selling. They're selling right south of 60K every single day, day after day after day. Well, that kind of tells me where they're going to start buying again. And a lot of times it happened over here as well. A lot of times what happens, these moving averages, especially the 9 and the 20, these moving averages catch up to it. Look at the double bottom analysis here. Look at the breakout. Look at the reclaiming of those moving averages. Easy trading environment. And so when you're in this neutrality, you're going to see some weird price action from an intraday perspective. Once again, it gets easy typically above resistance. That's why you look at 60K and you say, okay, I don't care what happens underneath 60K. I don't care what happens between 55 and 60K. Bitcoin's a volatile tradable instrument. When it gets above 60K, you're breaking out of intraday resistance, you're breaking out of daily resistance, and you're reclaiming that 20-period moving average at that point. I like that from a technical scenario. Let's keep an eye on Bitcoin over the next couple of days and, quite frankly, over the next week or so as it navigates this chop between 55 and 60K. That's it for the market Skyline and our journey as traders through the Skyline on a daily basis at Tackle Trading through the Halftime Report. If you enjoy this show, go ahead and give us a like and a share. Hit that like button. And as always, if you have any questions regarding anything at Tackle Trading and you are a pro member, get over to our Tackle Trading Discord channel and hit us up over there. You can hit me up in the mastermind group for the STEP system, or you can get any coach over there in the new Discord channel for Tackle Trading's pro members. Greg, I'm going to rapid fire some stocks in the news here today, and then we got another edition of Fundamental Focus coming up in just a few minutes from now. Greg, I'm going to go through story by story. If you have any take, just jump in and give me your take. Sound good?
Will do.
Awesome. Let's first start with Apple here today. Gap down, but not a sell down. Gets gobbled up after that gap. What caused the gap? Apple called their suppliers today. Who are their suppliers? Skyworks Solutions and Qualcomm, both major suppliers to the Apple iPhone 13. Apple calls their suppliers today and says, hey guys, listen, demand's down for the holidays. We're not going to be able to meet the demand. Gap down, but not a sell down. Market recovers. Any take on Apple on the recovery?
No, it's what we're seeing everywhere, right? News story brings in the volatility. It had a real great breakout just the other day. A little bit of news, but it's hard to keep it down. It's in a nice trending pattern.
Man, it was such a good breakout earlier this week. Tough candle yesterday, a little bit of trade management, but again, that pattern did get destroyed here. Stop loss was underneath originally 55. If you trailed it up, most likely you got stopped out, hopefully with a little bit of profit. Tough gap down on news, but again, to me, this if this news comes out in a normal trading environment, I don't think we're dealing with a 5-point gap down here. Personally, this news comes out, and I've seen it all week with earnings. Earnings responses this week have been exasperated. They've been all over the board. Again, tough time to report information coming into the market that needs to get priced in when the entire market is on pins and needles and on thin ice, right? And so it's just going to be a little bit more of volatility or a little bit more increased volatility, but again, still held the channel. Let's keep an eye on Apple over the next couple of days. Boeing also getting, whereas Apple got a little bit of negative news here, Boeing helping the Dow a little bit. Apple negative to the Dow, Boeing helping the Dow. Boeing come out today. Reuters is reporting that China will allow 737 MAX jets to return to flight in mainland China. If those of you who are not familiar with the Boeing story, Boeing used to be a blue chip that everybody loved. Boeing is now not a blue chip that everybody loves because of the 737 MAX in the situation from 2 years ago where 2 flights went down. It was a very, very tragic situation that absolutely could have ended very vastly different if Boeing was simply transparent with everybody, but they were not. That was the story. Don't need to go through it again. But the Boeing 737 MAX plane has been a thorn in the side of investors in Boeing for a long time now. And now you're starting to see that get into the far rearview mirror with even China coming out and saying it's time to bring back the 737 MAX. It is not time for me to get into a 737 MAX or Boeing. Do you have any interest in Boeing?
No, haven't for a long, long time.
That was
Nothing's
just
changed.
all of that was just a way for me to say I have no desire to either get in a 737 MAX or into Boeing. I agree with Coach Greg here. A couple stocks in the news from an earnings perspective. Let's go ahead quickly, rapid fire. Let's go ahead and start with Queen's Court pick from, we're starting with good today because my lady, Queen M, on Tuesday, Matt, I want to do a covered call and I want to do it on Kroger. What do you say? And I said, it's tough to do it before earnings. You're too tight against that. It makes no sense to do a covered call on earnings because it makes no sense to limit your upside while you take downside risk in a covered call in a 50-50 crapshoot on earnings. Kroger comes out today, though, and pounds the table saying, well, you might not have done a covered call, but you might want to look at me for a future covered call. I like secondary pattern analysis here, Greg. That means as we start to see that next pattern develop, that certainly can be looked at as a trade snap back to 44 or a little bit of an inside candle, high base type analysis, like a secondary pattern here on Kroger, because they pulled off the hat trick, Greg. We got a beat and an increase in guidance here. Revenue comes in at $31.9 billion versus the $30 billion expectation. A really good beat on revenue. EPS numbers come in hot at 78 cents versus the 67-cent expectation. They also, to pull off the hat trick, you got to increase guidance. Kroger does just that, increase both EPS and revenue guidance for 2022. Pounding the table, breakout of 44. Greg, what's your read on Kroger?
Yeah, great response to the hat trick there. I think if you're not already in this, then you're looking at this, as you said, secondary pattern. I'd love to see a pull back to 44 and change, a little lower maybe than 44. Ultimately, I think with this kind of strength, you're probably pushing back up to that $48 level as well. So, yeah, I think this is fantastic. Let's see how it develops.
And call me crazy, but I just like a food company that specializes in extremely cheap food in an increasing inflationary environment. Call me crazy.
Yeah, they've got the numbers to back it up too.
They do have the numbers to back it up. I'm excited to talk about Kroger for a potential tackle 25 position for next year. We'll get into that soon. Now let's move on to CrowdStrike CRWD here, which is not going to be on the tackle 25 next year. CrowdStrike comes in at a 17 cents versus an 11-cent expectation. They also came in at 380 versus 363. They do have a slight increase in guidance, but in my opinion, very mixed. I got this as a mixed report, but enough to remove some of the volatility. To me, it's still a stay away, Greg. And quite frankly, if it low base and breaks 200, I think that's a pretty good short down to 180. What's your thoughts?
Yeah, I'm not touching this with a 10-foot pole unless it is to the downside. It's been getting beat up for the better part of a month now. So
you're talking about a stock that went from 300 to 200 in a month, 33% downward movement in price. Earnings were okay, but it wasn't anything to hang your hat on. I just feel like that $200 price point, very, very significant whole number. Your post earnings, low base analysis, keep the channel tight against 200, violate 200, you drive it down to 180. Pretty simple for me. Thoughts?
Yeah.
Same?
Yeah, no, 100%. Like it's lost all momentum. Well, actually, I guess momentum to the downside has increased. It's below that 200-day moving average, which it hasn't been below there on this entire chart. So at least a year. Yeah, it's just ugly. And maybe it finds some support at 200, but I'd watch it for a break below there.
And if it does, fantastic. We're looking at a short underneath 200. So let's move on to Snowflake here. Snowflake has had massive volatility. This is a company that we had on report after report for months and months and months. Breakouts, retracements, we liked them all. Very consistent. It has not been consistent. Increasing volatility, but the volatility was increasing before we even knew there was a transformer variant called Omicron. It was happening a week before that. Volatility maintains here. Just a very difficult read from a technical perspective, Greg, on the daily chart. What's their numbers? The numbers came out. Let me try to paint this one, because the market's trying to paint this as a positive. I don't know how it is, quite frankly, because they came in at a negative 51 cents and the expectation was a negative 6 cents. That to me is a big time miss. But again, as a financial markets participant, you will realize something very, very quickly. People will look at everything either glass half full or they will look at everything glass half empty. Okay. For me, when you're looking at an expectation of negative 6 cents and you come in at negative 51 cents, that's not good. That's half glass full for me, or excuse me, empty for me. That's not good. But when you look at it on year over year numbers, it's actually fairly good. They increased revenue by 109% year over year. Again, last year context was not a very good year from a financial reporting perspective. It was a very difficult year for many companies, but it still is a massive miss on an EPS perspective. Revenue came in slightly better than the expectation, 334 versus 305. And they had a mixed guidance report, but overall a slight increase in guidance. Certainly not a hat trick. Gap up, but hasn't really found any legs following the gap up. Greg, what's your thoughts?
Well, I have some out of the box analysis for you here on this one, Matt. The fall of Snowflake started exactly when the snow started to fall in southwestern Ontario. So I don't know if the two are correlated, but
I see what you did there. 100% correlation. I can see seasonality now happening all over Snowflake.
That's
the first snow of the season, not where you live, but only where Greg lives, means Snowflake stock will go down. Yes, I see what you did there. I like the correlation status there, my friend.
Yeah, no, it's getting beat up. It was getting beat up before, so earnings not that big a surprise. You've been saying this whole earnings season, Matt. You got to beat. If you don't, then you're going to get punished. Well, guess what? You know what I mean? It didn't live up to expectations, even though it's a doji candle today. I think a lot of this, 3-4 sessions before that was probably front running that earnings report. And right now you've got to get some reversal analysis there before you can get involved to the upside on this.
Like if you were to ask me, hey Matt, where would confirmation be? If you were to ask me that question, I would literally say above 375 or underneath like 310. That's ridiculous. That is a ridiculous answer, but it's also a correct one.
Yeah.
What it means is this is a complete stay away. 100%. Stay away, and not for a secondary pattern. It's a stay away for a trend to develop here. You got to wait for that, in my opinion. Last, let's get into a little bit. We started with the good. That was all about Kroger. Kroger was excellent here today. Dollar General, let's talk a little bit about some bad. Dollar General comes out right in line on EPS numbers, right in line on revenue, right in line on guidance. Nothing really to hang your hat on, though. A little bit of a gap down. I got this as nothing to see and nothing burger. You agree?
Yeah, 100%. Yeah.
Yeah. All right. That's it for Stocks in the News. Greg, let's give the people what they want in another edition of Fundamental Focus, where you educate our community on a fundamental topic once a week. Whether it's P ratios, PEG ratios, debt to equity ratios, a fundamental concept. And I love it, Greg. You want to know why I love it? Because I love geeking out on fundamental analysis. I truly do. I am one of those geeks that will put 1,000 stocks onto an Excel spreadsheet and just start separating from pegs, PEs, debt to equities, you name it. I love fundamental analysis. Technical analysis, that's my baby though. Like that's my home, right? Technical analysis. But I do geek out on some fundamental analysis as well. So I get excited for fundamental focus. Coach Greg, what do you got in store for us today?
Well, as I understand it, you're starting to work on the new Tackle 25.
I am.
25, list, I guess is the word I was looking for.
I am.
So the fact that you're working on that, I've got a little something for you today to maybe help you out with that. We're talking about valuations.
Now,
here.
mind you, there are 11 criterias for the Tackle 25 that are set in stone for the last 7 years.
And we're not going to change them. What I'm going to do is add to them. Okay.
I love that. I love that.
So the reality is in those 7 metrics that you have, it's about valuation. That's what fundamental analysis does.
Can I just say one thing to that, Greg, and then I'll be quiet and let you fly. When you look at it, when you look at the criteria for the Tackle 25, honestly, there's lots that go into it from a fundamental perspective. But honestly, the question you're trying to answer is proper valuation. In all the different metrics you look at, you're trying to understand the ultimate question of, is the price of the stock a worthy price to pay for it? And that's all about valuation. And I just wanted to add that, Greg. Go ahead.
Yeah, and that's exactly what we're going to be talking about today is, that's really that's the only question I think that any investor, and let's take Uncle Warren Buffett, right? His whole investing philosophy, if you break it down, is, what's the value of a company? Is it fair value? Am I willing to buy it? Right. Well, that's what we're looking at and we've been doing this for a number of weeks now, is we're looking at different ways to value companies. We're looking at different metrics. You've got some in the Tackle 25. I've discussed some here. We've got a few more, that one that we're going to talk about each week. And so this week we're going to talk about something let me just back up to before Thanksgiving there. We talked about enterprise value over revenue. Okay. So basically, we were trying to decide what is the value of a company. When we look at the price, not only the price of it, right? The price gives us our market cap, but not only that, but what's under that price, what's under the hood of that company, that's where we get our enterprise value in there. So when we start talking about enterprise value, we're looking at the valuation of a company. How is it doing in comparison to something else, right? So the last time we spoke, we talked about comparing enterprise value to revenue, how much money is actually coming in, right? And so I'll tell you something, all of these metrics that we're talking about are also the metrics that other companies use when they're going to buy a company. So if we can take a page out of Warren Buffett's book, or we could take a page out of, a merger book, they're going to evaluate these companies the same way. It's probably going to work pretty well for us to look at these same things. So this is what we're talking about here. So basically, let me just go through this real quick. So market cap is the size of the company based on the price and the number of outstanding shares. That doesn't really tell us anything except how big a company is, which is good, right? That does lend some credibility to a company, right? Obviously, the larger companies tend to do a little bit better than the smaller companies from an income standpoint. But once we look at enterprise value, what it does is it takes the total value of the company, including any debt and cash. Okay, so we talked about this a couple of weeks ago. You guys go back and watch that halftime report. But essentially, it's giving us a better metric of what the actual value of that company is. Okay, so now we have that enterprise value. Now we can take that comparison. We understand the debt and the cash on hand and all the inner workings of the company itself. And that gives us a number. Now we can start comparing that. Well, last time we compared it to revenue. Well, revenue is just how much money is coming in. Okay, that doesn't take into account all the other things that go on in the running of a company, in the business, I guess, processes of a company. So this is where we're going to start talking about EBITDA. So EBITDA is just essentially earnings before interest, taxes, depreciation, and amortization. What does that mean? It's a lot of jargon, I get it, but let me just break it down for you. It's an alternative to looking at net income. So you could have your revenue, you could have your net income, and your net income takes into consideration a few different metrics. This EBITDA takes into consideration pretty much everything, and including accounting practices. Okay, so why does that matter? Well, if we take one company and they do their accounting a certain way, and then we take another company and they do it a different way, and we don't take into consideration the way they report their numbers, that the numbers that we look at are going to be skewed. Therefore, the valuation that we're looking for could also be skewed. We don't want that. We want raw numbers that give us a very clear picture of what we're looking for here. So EBITDA gives us that. So when we start looking at, earnings before interest, taxes, depreciation, and amortization, and we take that enterprise value and we divide those two, what it does is it gives us a multiple or a ratio. This multiple tells us, okay, how much are we paying for the value of this company with all of these other things like interest, taxes, all that stuff taken into consideration. Now, why does this matter? Well, it matters because we can compare two companies that are very, very similar in what they do. And we can also take into consideration any differences, micro differences that they may have. Like I said, accounting principles or accounting practices are probably the biggest one in there. So now we get to compare literally apples to apples. Okay, so this multiple, basically we're streamlining the number. We're getting a clearer picture than if we just use net income or revenue. So what we want to do is just compare these companies, and the way that we can do that very simply, one of my favorite places to go is Yahoo Finance. Okay, if we go to Yahoo Finance, I'm just throwing KO here. We've already got it up, but if we throw in Coca-Cola here, you're going to see that this gives us a bunch of different numbers just across the top here. Well, we want to go right to financials. If it'll come through for me there. There we go. And so this is going to give us a bunch of stuff right off the bat. Sorry, I apologize. Statistics, not financials. I'm making my own mistakes. If we go to statistics here, this is going to give us, it says right at the top here, valuation measures. Okay. We talked about enterprise value with revenue, right? And this is the multiple that I was talking about. Now we're going to look at this number here, enterprise value over EBITDA. This also gives us a number or a multiple number. What we want to do is be able to compare this against a similar company. And that way, like I said, it takes into consideration everything. It's a more focused number. And now we can kind of compare it. So let's say we're looking at Coca-Cola, right? It's a beverage company, and it's got a multiple of 17.38. Okay, now the thing that you need to know is the lower the multiple, the more of a quote unquote bargain potentially the company is, because meaning that enterprise value, there's value to that, and then we're dividing it by that EBITDA, which takes into consideration how much it's actually earning with all the other things worked into the number. This gives us that clear picture. So if we go to another beverage company, Pepsi is always one that I like to look at. We can sit here and say, well, they're different stock prices, but they have similar numbers when it comes to valuation. But we can see here that enterprise over EBITDA, sorry if I can get it back there, they're 18.23. So if we just took that number and compared it, we got Coca-Cola at 17 and we got Pepsi at 18, we would say that potentially Coca-Cola is the better value. Now, of course, that's not going to be, we're not going to use that only as a metric. There's other metrics that we've gone through and that we're going to continue to go through. But this is yet another one where we've really drilled down the number to say, okay, what is the valuation of this company? How is it that they're running their businesses? And does it make valuation sense to us? And so, Matt, when you're using the Tackle 25, you've got your own metrics in there. This is just another one of those metrics that we can use in a comparison tool between companies and really give us that apples to apples comparison.
Coach Greg, absolutely love it. Thank you so much for another fine edition of Fundamental Focus. You are the best at fundamentals at Tackle Train. Really appreciate that, and always appreciate your insights there, Coach Greg, in the Halftime Report. Our community and myself, thank you for coming on every Thursday in the Halftime Report. And Greg, thank you for all you do for Tackle Train. Really appreciate that as well. Greg, let's go ahead and have some final thoughts as we navigate a choppy market this week. What are your final thoughts, my friend?
I think we said it right at the start. We've got to get some follow through on these markets, right? The volatility is, still high. We got to get some follow through. I have no interest, like I said earlier, until it gets above this shelf. I've got no interest. I need to see the volatility subside. I need to see some support here, and then you can dip your toe back in the water, so to speak.
I agree. Number one thing I think I'm looking at technically is volatility subsiding, and then I think we can see a little bit of a clearer perspective from a technical analysis read perspective. Coach Greg, once again, thank you so much for coming on the halftime report for December 2nd. If you like the halftime report, give us a like and share and tell something about it. And on Monday, I will be doing a special webinar for Tackle Trading 101 series on YouTube on the covered call, a beginner's guide to the covered call. So get excited for that for our YouTube community. Looking forward to hanging out for another edition on Monday. Outside of that, I'll be back tomorrow in the halftime report with Coach Frank. Until then,